So Starbucks just announced a 9.8% dividend increase. Should you be buying shares at current prices today? Hey everyone, welcome back to another video here at FiscalVoyage. My name is Felix, and today's video we're going to talk about a previous video that I did on Starbucks in November 2019, and we're going to discuss my recommendation at that point, and also discuss the dividend increase as well as the valuation for Starbucks in today's video, and to see if it's a good buying opportunities at today's price. But before we get started, if you're new to the channel, make sure to hit that subscribe button, like this video as well, and check out my free ebook in the description below, 5 quick metrics to look for before you spend more time in evaluating any company. Starbucks Corporation on November 2019. As you can see here, it was on November 24th. That price was $83. Fair price averages at about $82. So it was overvalued by 1%. But since Starbucks is such a high quality brand, people, even the coffees are expensive, people still line up to go to there. I gave Starbucks at that day a buying recommendation, and this is again because of the quality of Starbucks. People love the brand, people love their coffee, and the market loves Starbucks. So at that time, on November 24th, Starbucks over here, I think I did it on the weekend, so we'll start here on the 25th at $83. So it was going up all the way up to $3, and then around March of January, beginning of February, it started to drop. Of course, with the China shutdown, because Starbucks have stores in China, so there was a lot of shutdown on that. So, and the economic shutdown brought the price very, very low. As you can see here, all the way down to about $56 in the March 23rd, $56.55. And then since then, it's been picking up very nicely. So what I did was, when I made that video, I actually bought shares of Starbucks. You can see here in November of 2019, and I bought that shares and was riding up, so it was already kind of overvalued, as you saw, about 1%. But I bought shares because of the high quality company. Earnings was growing very nicely. You can see here, 2014, 21% increase, 19%, 21%, 8, 17%, and very nicely. So it was going on that same trajectory of mid-teens to high-teens earnings growth. With that drives higher dividend growth. But of course, with the economic shutdown, the price dropped dramatically, and I loaded up a lot more around the $66 range. So that's why I have an average cost price here about $68. So I'm up very nicely now with the Starbucks position. And as you might have heard of, Starbucks actually bumped their dividend by 10%. You can see here Starbucks declared a 45 cents per share quarterly dividend, a 9.8% increase from the prior dividend of 0.41%. So this gives a forward yield of 2.09%. And we're gonna look at the yield history, and you can see here about the 2% looks like a nice buying opportunity. And you can see here 2018. Around August, the company had a yield of 2.4% or 2.3%, and that was great buying opportunity then. And of course, when the market crashed, over here 2.7%, and again here at 2.9% because of the recent increase. So I think Starbucks still is fairly valued, might even be slightly overvalued based on the fast graph. And we could look at Morningstar. Morningstar gives a $90 fair value price, where yesterday's close was $85. 3-star rating, which is fairly valued. Fast graph is showing the same thing, that Starbucks is fairly valued. But if we were to revert back to the mean, and as the economy starts to open, you can see here 2020 first off is going to be down 66%. So you can see here the dividend isn't covered by adjusted earnings as well as free cash flow on this year alone. But because Starbucks has, good credit rating, and they have cash, they've used that to pay the dividend for this year. But you can see here for 2021, they're expected to bounce back at $2.64 free cash flow per share versus the $1.72 in dividends. So if we go back to the adjusted operating earnings to look at the evaluation, you can see that during this time period here, you can see that at current price, you're not going to have tremendous rate of return in the next few years. But in 5 years, 10 years, and of course, this is going to be a long-term company. I don't see Starbucks going anywhere because, again, of the brand. People love Starbucks. Starbucks stores, I see them, the drive-thru is always backed up. People always inside. But at current price, it is fairly valued. It's not fairly valued to overvalue. I don't think it's an extreme discount. If we could get a dividend yield about 2.2 or 2.3, again, right now it's 2.09. 2.09. If we could get this at 2.3 or 2.25 yield, definitely a buying opportunity, a great buying opportunity. But right now, it's a decent buy. You can't go wrong at today's price. Overall, the company is investment grade at BBB. The earnings yield is very, very low, again, because of the fact of the valuation. It's a decent buy. I wouldn't go all in at current prices, maybe a few shares here and there. I would definitely look for a dip. To me personally, if I was to buy more shares, I'm happy with my current position, and I'm going to continue holding and collecting the dividend. But overall, Starbucks is a great company. I'm very happy that they increased the dividend, by 9.8% with all the things that's going on. They had a rough few months in March, April, May because of store closure. They still were open with drive-thru and such, but overall, they did outstanding. So I'm very, proud of Starbucks and their employees and the management. They did very well. But overall, I think the company right now is fairly valued to slightly overvalued, but still a decent buy. But there are, of course, better opportunities elsewhere, like some of my previous video, like my last video, the top 3 dividend aristocrats. But Starbucks, if you wanted to open position right now, it wouldn't be a bad time right now. With 2021, 180% increase in earnings, I could definitely see the price increasing substantially, but it is a risk because of the fact that it's fairly valued to slightly overvalued. But overall, I like Starbucks. I own it. I'm very happy about the dividend increase and where the company is heading. So those are my thoughts on Starbucks. Again, the company is amazing. I'm happy with my current position. I think it's a decent buy. It's not a great buying opportunity right now like it was in March and April, but it's a decent buy for long-term holding because of the dividend yield. It tends to be slightly fairly valued to undervalue-ish at around 2%. And if you get it at 2.2 or 2.3, definitely a great buying opportunity then. But at current prices, it looks to be fairly valued. But overall, the company is an outstanding company with great growth potential. And is growing, as you saw. It's going to grow 180%. Earnings are expected to grow in 2021, and then 2022 a nice also increase about 15 to 17%. So I hope you guys enjoyed this video, and if you did, hit that like button and check out my free ebook in the description below. And again, if you're new to the channel, make sure to hit that subscribe button for more videos like this. And thank you, and I'll see you guys in the next one.